Hello, everyone. Welcome back to the Prospero.Ai stock market live streams. It is Wednesday, August 21st, and we have a bunch of great topics to discuss today. Welcome, everybody, to the stream. We are working on a green day in the markets overall. Everything is up, and I like to track how the IWM does, and it's actually leading today, so that's a change we're seeing. Markets got a boost. It looks like when the FOMC minutes were released, we'll tell you what was said in them. And we have some other macro data to discuss. We got non-farm payrolls, which were revised down. And we also got earnings from TJ Maxx and Target. So we'll take you through all of those pieces of information and how it's changed our view of the economy going forward and what we can expect out of the Fed in September. We still have the Jackson Hole meeting taking place Friday, where Jerome Powell will be speaking. So that's kind of the last bit of information we're going to get out of the Fed this week. And then we have a story to discuss about Meta stock, which we've talked about a similar story to this in the past, where, in election years, sometimes Meta has gotten pretty bad headlines as they've tried to balance the content they put out on their platform. But there's a new piece of information where the campaigns are spending far more on social media than they have in the past when they were spending on legacy media outlets. So maybe it could possibly be a bullish type of event for Meta. We'll discuss that in detail. Then we have Walmart selling out of a Chinese stock. If you guys know which one, comment in the chat right now. I'll see if anybody guesses correctly. But they had a 9.4% stake in this company and no more. So we'll talk about what that means for this Chinese stock, the China economy. Obviously, Walmart probably has the best data and look at everything going on. So pretty bearish story for that company. Then we have Tesla, which Cybertruck sales have been doing fantastic. The past 2 months, the Tesla Cybertruck has been the top selling vehicle in the United States over $100,000. So I'm sure Elon Musk is very happy about that. And they also had a weird clause that they just removed, which I'll tell you what that was for. I didn't actually know you could do this with vehicle sales, but they did it. Then we have a couple more stories that we're going to get into today before we turn it over to the model portfolio update at the end of the stream. But before I tell you the rest of the stories, we have actually had over 50 people in the stream already between YouTube and Twitter. So like it up, people. 50 people in the stream right now. Let's try to get to 20 likes between Twitter and YouTube. Let's see if it's possible. I'll check back in once George is in here and see how we're doing on that goal. But without further ado, we have Netflix, which just revealed that they are going to make a Squid Game video game. So they are just making all the content they possibly can with Squid Games, which we know was a viral hit when it was first released. It's going to be a battle royale and available right within the Netflix app. So interesting move into mobile gaming. We'll see what it means for the stock and if Prospero signals are liking it. And cool new venture for Netflix. Then we have Apple iOS 18.1 unlocking NFC tech. If anybody in here knows what NFC tech is, I'll be supremely impressed. I'll tell you what it is when we discuss the story in detail if you don't know. So you'll have to stick around till then. But it's going to be good for PayPal and Block. So that's a pretty big hint on where the tech lies. And then last but not least, the final story we will discuss today, if we have time. I'm going to try to get us over to the model portfolio a little bit earlier today. I know we were rushed last week, but hello, George. Welcome to the stream. Just us in the chat hanging out. One more story I'm going to share, and then we'll get on into things. But we have some sports betting data. So there was a study done with 230 households. So big sample size and a lot of concerning data about people who did any type of sports betting in the past year. So we'll tell you everything there is to know about that story. Like I said, when the stream started, all the markets are up today, but let's take a look at QQQ and QQQ and SPY net option sentiment. Q has breached 60. It's all the way up to 61. Nice bullish level for the QQQ. And I haven't looked at the SPY yet, but I'm guessing it's going to be lower than the QQQ just based off how bullish that is. Okay, so the SPY is at 48. So that is a flip in the SPY and the QQQ for the better part of the last month, I'd say, maybe more. But now it's a little bit below. But I think you'd still consider that a bullish level, right, George, at 48?
Yeah, the SPY definitely, has been down a little bit. I saw it like maybe I'll look at the time series, but yeah, like kind of if you looked at it, fell off a bit of a cliff this morning. Yeah, it touched down at 48, back up to 50, now down, but like yeah, that's a very different path than QQQ. So it's something to keep an eye on.
And we got a lot of data today. We had earnings from TJ Maxx and Target, which both stocks were reacting positively to. So more good retail data. But then we got some bad. So I feel like all this data is kind of going back and forth. It's tough to know like which is going to win out in the end. But we got non-farm payrolls revised down 818,000 jobs, which is just kind of shocking to me. It's like, the FOMC is making the decisions based off this data, and to see it move that much, it's kind of a little bit surprising to me. But so that's a weak point of data that we got. And then the final piece of data we got today, we got the FOMC minutes, which I think the market and like Bitcoin and a lot of small cap stocks and riskier stocks reacted positively when they saw in the FOMC minutes there was a vast majority of Fed officials see September rate cut as likely appropriate. So almost all but guaranteeing a rate cut in September. But with all that data being released and digested by the markets today, how do you feel about it? Net bullish, net bearish? Where do you stand on things?
Yeah, I'm gonna see. I wanted to take a look at the latest probabilities because I was like, oh, I haven't looked since the numbers came out, and I'm doing my best to view this very small web page. Oh, that's what's happening. I didn't accept the cookies from the CME group, so it wasn't changing. I don't know what's happening here, but it's also a function of this being very small on my screen. Yeah, I don't know what the hell is going on, but it's not giving me the normal screen that I look at. But anyway, I don't really need that. How do I feel about the market? I feel very bullish, especially where QQQ net option sentiment is, but still cautious. I've been staying pretty close, long, short, because I'm just like waiting for. I wrote like an op-ed that I submitted to the Washington Post, that was very much to the effect of like, yeah, it's going to be tough going into the election because no matter how bullish it is, there's another side being like, oh, if the market's really taking off, that gives Donald Trump kind of every incentive to say something that might hurt it, right? I'm not saying he is or that he wants to hurt it. I'm just saying he really cares about the market. He wants, like, in order for it to be, him to have the biggest gain while he's in office, where he really cares about, which he really cares about, talks about time and time again, the lower it is, the easier it's going to be to do that. So that just makes me, very nervous. And I think a lot of people are going to be nervous going into the election. I mean, just looking what the other side says, and like I've even talked, a few people about this. Basically, like Biden is worried about there being like a peaceful transition, right? If we're going to criticize or say the other side, and like, do I think Biden might have some intelligence that we don't have access to that might have him particularly worried about a peaceful transition? Absolutely. Could I see that being, kind of political jockeying, because he just wants people to be concerned and scared of Trump and like, oh, like we're really scared of this guy. Maybe we shouldn't vote for him. Could really be either one. But that just makes me concerned overall because what you always have to remember is, like, let's say people are concerned about destabilized markets. Let's say, the candidates are not going to do anything to affect the markets before the election, which is, I think, a tall order. But let's, we like that. We criticized macroeconomics for doing this, I think, a week ago. But now we're going to do it ourselves. We're going to say, okay, let's pretend that nothing happens. The candidates don't say anything, right? When you're just like looking at a pure event-driven strategy, you don't just play the day of the event, right? Let's say you're nervous about the election, right? You're not going to say, oh, well, I'm going to wait until the day before the election to get conservative in terms of my bets, in terms of what I think. No, you're going to say, like, oh, I'm concerned about the election. Maybe a lot of people are going to start selling their stocks a week before, right? But then those people might say, oh, if people are going to start selling their stocks a week before, maybe I should start selling my stocks a month before just to make sure I'm clear of them. That is all to say, there is, I think there are reasons to be concerned about both the election and potentially what's said into it. So I'm going to stay pretty conservative overall. I'm going to be keeping probably more shorts than I otherwise would with a 60 plus QQQ net option sentiment score. What I'm trying to do is bail quickly on at least the shorts while maintaining my upside. Like I think this is probably the first time this year maybe that I am pretty heavy chips. I've got NVIDIA, I've got SMCI, and I've got Broadcom all in. And I'm not sure I've owned all three of those at the same time, even this year where I've been very bullish on tech. And then we also have Zscaler, CRM. So what we're trying to do is hold that tech upside while being defensive at the same time. And as I did today, layer out of some tech plays in the morning because I was expecting a good day, tech shorts. So I'll continue to be like that. And I just think, like, you might tell me after the election that I was just worrying and, blah, 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 and all that stuff, and it could be fine. Or you could thank me for this warning. But if there's one thing that we're always going to be, like, we're going to err on the side of caution here. That's what we do. That's one of the reasons why our performance is so good. You might just see, like, the big wins, but everything that we're doing other than that is very important. We're only exposing ourselves to risk. Like, for example, just to use ASTS as an example, like, we at one point had two positions, but the second we had a big gain, we went down to one, then we stayed at one. And then, only when we saw the right event-driven thing that they said their launch was going to be on time, we went back to two, and we didn't stay very long after the volatility, right? We might have missed some gain, but we already had, like, especially in the last buy, 70% gains. So, that's advice that I always kind of can give to retail investors, where it's just like, yeah, sometimes you're giving up that 120% gain to get the 70% gains and to not lose those 70% gains. But yeah, I just think overall, you can never be too conservative as an investor. And it really comes down to two things, right? It's that you can never be too conservative, but you also have to play to your strengths. And then you also have to, like, not be afraid to take risk in your upper, and this is what kind of our newsletter was about this week, your upper echelon of ideas. And that's really the way to go. Like, otherwise, just, be very defensive. And that's kind of the way that we operate. And it annoys some of our, like, more, like, longer term investors in our newsletter, or just, like, sometimes we hear, like, this is too many moves or whatever. Sorry, not trying to annoy you. Just, like, a lot of those short positions especially are in there just to play defense. And then, sometimes you want to pull some of the defenders off the field and put them on offense if you want, or just leave in more offense. But yeah, I think that's a big thing. And that's our trading strategy, or I should say investing. And that's our strategy overall. Like, if you go and look the last 2 years, even this year, we have more shorts than longs. Why do we have more shorts than longs? Because those shorts are playing defense. And the second that we don't feel that we need defense, whether it's like stuff that we're holding over the weekend or just like an event that we're looking at, or the signals change on them, and signals change on shorts a lot more, like especially like our tech shorts, retail shorts. It's very easy for them to go from like 10, 20 net option sentiment to 50, 60. And that's when we tend to get out. You don't necessarily see it as much on the other end where stocks are 70, 80, 90 net option sentiment and go to 40 quickly. So that's kind of the operation, just so people understand how like the strategy, ends up taking effect. But that's the strategy that works for us. And so, we'll cycle out of shorts quickly. And then if we're nervous again, we'll cycle into new shorts. And that's how that number gets higher on the short side than the long side.
And so I see a question in our chat from Jonathan about thoughts on MU, which I believe is Micron. And just on Monday, we talked about, the top 5 AI chip stocks, semiconductor stocks. And you actually gave 7 names, and Micron wasn't one of them. So I'm wondering, is Micron one of those stocks that's like a victim to the competitors that are just, better looking stocks in the same area of the market as it? But so how do you feel about Micron?
It's interesting. Micron looks very similar to AMD, except AMD had higher downside. So that's one thing that we always talk about, how they're not inverse numbers, right? AMD, Micron is 61.29 upside downside, and AMD is 56.32. Oh, I guess it evened out a little more. I guess downside's lowering on a lot of those stocks. Yeah, downside shot down at open on the 20th for AMD. It's interesting. I feel very similar to how I feel about AMD, that I like other ones better. And like, to expand on that thought a little bit, it's just like sometimes you want to pick the lesser stock, like, just because there's more upside. But like, I don't really think that's true of Micron versus like Nvidia or SMCI. Like, if you want the big upside with risk and potential like meme attention, then Nvidia's your horse. If you want a stock that's poised to, grow a lot more in terms of like relative profitability, relative, revenue that's potentially not baked in. Like if you look at SMCI's PE versus Nvidia's PE, it's just like night and day. Yet they have some of the same like upside catalyst characteristics. Then you want to go with SMCI, right? And Micron's and the bets play out. There's a lot more people betting long-term on SMCI or NVIDIA, and like especially Broadcom, right? So Micron's just like, I think some investors try to get too cute, is I think my best thing to say about Micron, where they don't want to just be saying the same names as everyone else. And, you invest in Micron because you're like, oh, I was on Micron before everybody else, and I saw it be like NVIDIA before everybody else. But, sometimes the obvious answer is the obvious answer. And I think the obvious answer here is, if you want the safest AI play is going to be Broadcom or maybe ASML, right? Because it's not exposed to the tensions. And Broadcom's just like a stable company, just made a major acquisition. And, obviously things like phones that are not going to have the same like China tension problems as like high performance computing, exposes you to a little more safety with Broadcom. If you want like crazy upside, like crazy unlimited potential upside, then NVIDIA's your horse, right? If you want some upside that might be a little more based on value, then SMCI's your pick, right? Micron's like got elements of all of those, but is not really the strongest in any of those categories. And that's what I'd always encourage you. Nothing wrong with investing in small or mid caps, even though none of those are going to be small or mid cap. Nothing wrong in investing in anything like that. But the big question, like when I was talking about like SoundHound back in the day, like I was talking about how like you could look at like the revenue multiples that, you know, SoundHound versus Nvidia was trading at, and even looking at like the growth of them compared to the growth, and Nvidia was growing more, like the revenue multiples were much more favorable to Nvidia, even looking at SoundHound's growth relative to where Nvidia was today, right? So you're in a market now where I think the large caps, and we say this time and time again, are growing just as fast, if not faster, than the small caps. So if you're going to talk yourself into like a secondary choice like Micron, like you really have to have solid reasons. And at the end of the day, like what reasons could be more solid than Nvidia makes the best tech in the world, and they have this, you know, stranglehold on market share, or SMCI, you want to go value, or like, that's what I'm saying. Or SMCI has this very unique cooling technology that's been responsible. Like SMCI is like a 40-year-old company, but it's only this cooling technology that's made them take off. It might not be 40, it might be 30, whatever. They were nothing for a long time. And then this cooling technology basically like rocketed their growth, right? If you want, like I said, a little more stability, a little things out, a little more outside, you know, in terms of like the phone market that has exposure to AI, like a more stable long-term company that's not going to have the same volatility, then it's Broadcom. Like maybe you could tell me what's the value pitch for Micron? Like what's their category for why they would, you know, do as well on the value side? They don't look as well on the signals. So that's kind of what I always, you know, hold myself to. If there's some value argument that could overcome the signals not being as good for Micron, I'm open to that. But this looks like a case, and oftentimes this is the case when you look at the Prospero signals. The value argument and the signal argument are aligned, as I would expect them to, and as we've had very many successful bets on.
There you go, Jonathan. I think that was a deep dive into Micron and a good answer there. And here's another story about this power of the signals. So we have Meta, which we talked about how when we got the tech pullback and, you know, all the markets pulling back a few weeks ago, how Meta was kind of holding up better and leading coming out of it. But then we also earlier in the year talked about how they had gotten some headline risk, possibly, you know, some downside risk in the Meta stock with the election coming up this year, because in past elections they've gotten some bad headlines around it. But then I saw a story today about how the campaigns are spending far more on social media than they have in the past. In the past elections, it was mostly legacy media outlets. And just in July alone, Trump spent $24.3 million. Harris spent $80.7 million. So could we possibly be seeing the Prospero signals sniffing this out? And maybe this election, it will actually be bullish for Meta, and the Meta stock performance that we've seen recently kind of goes hand in hand with that.
Are you suggesting that politicians that knew they were spending more on these social media platforms could have bought the stocks?
Never.
We've never had any indication that things like that go on. I think you're right, and I think that like not only politicians, but that's exactly what we talk about, why we rely on the Prospero signals, right? Because it's often people betting in the options markets that, you know, have this kind of information. You know, you could be a political donor, you hear in passing, like, boy, we're buying, you know, 5 times the Meta ads that we bought at this time last year. And you're just like, okay, buy. Like, you know, it's the kind of thing that, like, we talk about non-public information. That's not illegal. Just because like you're talking to someone, they're not affiliated with Meta necessarily. You're just like meeting them in passing. They're talking about a business that could be considered deep value research. I don't think they're like, you're not really, you could get in trouble for like, just like running your hedge fund like that, where you're basically like circulating around and like, you know, anyway, you probably wouldn't. But I don't want to say anything that would ultimately, like, you know, get anyone in trouble eventually. But I think there's two sides to it, right? There's the risk that I'm saying still exists, right? Like, I think especially like, I mean, it could go either way actually. But if, let's just say, like, Trump has had his issues with Meta, and then also various liberal parties have had their issue with Meta allowing too much like Trump conservative stuff. So it kind of goes both ways. So they're not out of the woods there. Like, you never know if either side is going to say something that they're pissed off about the way Meta's handling something, blah, blah, blah. And that's what I'm saying. Like, all of this political theater has made has made me very risk averse. And that was actually one of the reasons why I sold Meta before earnings, because I was actually kind of worried that they would guide down based on concerns about like political issues, maybe hurting their sales, listing that as a risk factor. Who knows? Maybe they've done a good balance, like we've talked about this before, in terms of their ethics committee. The fact that I'm not hearing lots of complaints about them, to me, as I've said, probably means that they're doing a good job making both sides feel heard, that they're, balancing the messaging and everything like that. But it's a huge risk. All it takes is like one person being fed something, like, being fed something that was like, I'm going to say this because there's been some issues with this, traced to like a Russian source manipulating the election, anything like that. Yeah, it could not be either political party. It could just be like legitimately a Russian source that like is planting ads on Meta that gets them in trouble. So it might not even be the candidates. It's risky for them. But I'd say the fact that everyone on the institutional side seems so sure about it, that is encouraging to me, and that makes me feel safe putting them into portfolio. I will watch. We'll see. Is this election cycle when Meta's finally going to lose their stranglehold on the 100 upside breakout that they've had for 18 months? That would certainly be interesting. I did actually see in the recent downtrend, I saw Meta's net option sentiment hit the lowest number I've ever seen, like 40. But that was just like a blip down. But more weakness than I've seen. But there was concern in the market overall. But yeah, I think there's a lot. I think people probably were, at least some of these like very confident buyers probably knew about some of this added political spending. But that is a double-edged sword, right? The more spend going onto that platform, the more ads being run, the more of a chance that something bad could happen in terms of a headline. But, like I'm saying, I don't know. You'd think they could have hired a press team before. You'd think they could have made better decisions. But it's like night and day, like the heat that Meta takes now versus how much it took like 4 years ago. I even saw like a John Oliver special on Hawaii where like Mark Zuckerberg was basically doing like awful things on this Hawaiian island and like stealing, but I don't want to say stealing. I don't want to get into like suing people for their land. Haven't heard anything about that. Like, I feel like there was a time where like Mark Zuckerberg couldn't like throw some gum on the street and you wouldn't hear like what a horrible person Mark Zuckerberg was. So I don't know what's changed, but it's like, it's actually kind of like, I feel like it's a switch. I feel like Google used to be like, you never heard something bad about them. They were like the golden company, everything, same kind of thing. Everybody loved, Schmidt and Sergey, Larry, and now like they seem to be stumbling on like bad headline ad after bad headline, and somehow like Mark Zuckerberg, who I feel like used to be a punchline, like be like, oh, like Mark Zuckerberg did this, or he's a fool, or he's like a ghost. You're just not, you're not hearing much of that anymore. So I don't know, like, I don't know if he like did some campaign with every major media outlet, or maybe he's buying, like, who knows? But he's totally turned around his image in the press. And if you turn around your image in the press, there's a good chance everybody else starts liking you more too.
Yeah, I definitely think Zuckerberg did something like consciously, because he dresses differently, he approaches interviews differently, he shares stuff on social media differently. So yeah, I think there's definitely a conscious switch there, and it seems to have worked. So good for them
Or
and
they
Meta. And
just or Meta rolled out like Zuckerberg bot 2.0. 1.0 had a lot of bugs. Like two is a lot better, including the clothing choices.
I can't wait for 3.
They got like someone who that led the team that was like a designer / coder that just like that got him better outfit choices.
Yeah, so we'll watch Meta stock as this year comes to a close and the election rolls on in. It's going to heat up in the coming months, so we'll keep an eye on it.
It's going to be a real battle for me, like going into the election. If Meta's still like holding strong in all our metrics, and I have this overarching fear of what could happen. I mean, if I do, I might I might have to short a few other ad businesses. I don't know. X would have been a good thing to short before like Elon Musk owned it, but now that's like kind of like trading the same thing, and it's a private company. So I might have to figure out a new way to hedge or something like that. But yeah, it's going to be interesting.
Hey, you could always short Snapchat when in doubt. But speaking of Elon Musk, that brings us perfectly into our next topic, because I got some Tesla stats to talk about. So I didn't even realize this was possible, but I guess they had a clause on the Cybertruck where you weren't allowed to resell it if you got it, and there was a $50,000 penalty. But that has just been taken away recently. So that was news to me, and I'm sure it's interesting to some of our viewers that you can actually do that and put that in a clause when you buy a car. But then also we have a stat about how the Cybertruck was the best-selling vehicle for the past 2 months in a row, with a price tag of $100,000 or over. So Elon Musk's probably a happy camper right now with that data, right?
I actually have like a personal story to start out with, that like $100,000 or more car thing. That's pretty funny. I feel like it means I'm getting to be an old person. Like before I would always be like, oh yeah, I'd love a Ferrari, like, or something like that. But I actually like heard these words come out of my mouth. I was like, well, like now maybe I would like, a car like under $100,000 as my dream car. Cause like, I don't want to get speeding tickets or look like one of those like jerky older people that's like trying to impress others by owning that car. And like, yeah, I think that's the difference between being like a young person and an old person. I'm just like, I don't really need to stand out or get a ticket. But in terms of the actual thing you asked me about, one of the things that I think just like needs to be corrected in this country is like the way like these like terms of service agreements are like put together and everything like that, where like if you have a clause like that, you should be obligated to put it in bold at the top, like a non-traditional clause, right? Because like nobody's like, you buy a car or you sign a contract, you're not thinking that you're going to sign something that has like limitations, like penalty limitations on selling it. That's almost half the price of the car. So yeah, that's a big thing that I would love to see fixed in the legal profession. But yeah, in terms of it being like a high, we keep talking about this interesting strategy that we're gonna see it play out, and I think it's gonna be so interesting. Like I've never seen such a prominent company like align themselves so much with like a political candidate. It's or even a party. Like it's going to be very interesting to see it play out. Obviously, we've talked about it a lot. Like it's a big winning hand if he's right and Trump wins. Like hats off. I mean, I think he's absolutely going to get like not only a bump when he wins, but like some of the things he wants, like, legislation around self-driving cars or whatever. But the interesting thing on the other side is going to be now do the Democrats, and this is like where you're just like, is there a climate friendly candidate now? Like, I wonder if the Democrats now do something to target electric vehicles, because they couldn't just penalize Tesla, right? Target electric vehicles, target autonomous vehicles, and that's kind of like in the other thing, like in their zone of what they normally would want, or sort of would. It's hard to tell where they're more, they care about the climate more than Republicans, but do they actually care? Unknown. But the interesting thing to see, right? And this is just like a practicality, right? If you are in political power and there's someone that's basically like pushing your opponent, it's in your best interest to penalize them. Otherwise, you might have more people that are just basically like, well, in the future, if the Republican candidate wins, they're going to help me out, or if that's the model, right? But the other side is like, hey, if people could just like align themselves with political candidates and not face consequences, you might see something like that. And they're not going to do something overt, like, because that would be stupid. And you could actually get, Elon Musk would love to throw a lawsuit at the US government for targeting him. But like, it doesn't have to target him. It could just target electric vehicles or, maybe spaceships. That would be like the easy one to do, and maybe hit in a different area where you're just like, yeah, the US government isn't allowed to spend money on like outside spaceship vendors anymore, which would hurt AS. I mean, I guess who knows? Maybe they could do like, yeah, that would affect ASTS too. So yeah, maybe we have to be like, oh, do we have to hedge against a lot of stuff if the Democrats win? That's overly defensive. But yeah, it's certainly something to think about and interesting. Like, honestly, I don't think they'll do that, just because like if there's one thing that you can kind of rely on the Democrats for, it's to be kind of feckless. So like, even if they wanted to target him, who knows if they'd be able to accomplish it? Maybe it would like fall apart in their own party. They couldn't agree. The Democrats, everybody. But yeah, like there's obviously we kind of come for both political parties, I think, fairly, because honestly we're disappointed in both, and a lot of like where this country has gone relative to where it has been. I think we'd all like things to be better. So I try to throw punches on both sides. But yeah, I think the interesting part about this is Elon Musk kind of broke the seal here. Are we going to see, and like even going back to an earlier topic, like Meta kind of got in trouble for leaning Democrat, not even coming out and being like, we prefer the Democratic candidate. And like, Mark Zuckerberg, like kind of like, endorsing, like that would be something where they took heat just for like managing the ads. Imagine the heat that they would take if that happened. And obviously they control information, so that's very different. I mean, I guess Elon Musk controls information on X too. Yeah, I wonder why it's not a bigger deal, to be honest. Like, if you think about that Meta got like kind of taken to task over like skewing ads in a certain direction, and Elon Musk didn't really get anywhere close to the same criticism of like straight up favoring a candidate. So that is kind of an interesting comparison point. But we might see that. We might, now that like that has been something that's happened, we might see more companies picking sides in the future. I hope we don't. That sounds like even worse than what we have now. But I guess we'll see how this all plays out.
So the next story is about Netflix, and I think they have one of the more interesting charts of any stock in the past 5 years. From the COVID boom they got, where they were over 700, all the way down to like, I think their stock went into the 170s. So like a massive decline, and then now round tripping the entire thing and hitting all-time highs again. It's kind of crazy. But they just revealed that they're making a Squid Games video game, which is a 32-player battle royale, and it's going to be available right inside of the Netflix app. So does Netflix getting into mobile gaming like kind of legitimize the stock move of hitting all-time highs again? And none of the other streaming platforms have that kind of inside of their app. So it's kind of a differentiate. I can't say it for them.
I mean, it could be smart, but is anyone really getting Netflix for the games, right? It's a game of new subscribers, right? Now, I don't know how they're planning to monetize. There could be an argument, for example, to say that that basically they're planning to monetize by like having like $1 extra for the games or whatever, slowly roll about, and that could work. I don't know what their model is, but yeah, like I think we've seen a very interesting arc with streaming, right? And like when it was going up to there, everybody was like, "Oh, Netflix is going to eat the world," right? And then as some of the networks finally got smarter, right? Everybody was like, "Oh, maybe like they'll lose subscribers," but like now we clearly live in a world where you could subscribe to Netflix and 16 other things, and that's the way it is. So it's definitely interesting to see what they can do to expand, what kind of like AI content, how that plays out, everything there. But at the end of the day, it's just a hard business to invest in because they're so dependent on content. And, there's more and more of these like independent like studios, which I think is great, right? And what does independent studios do that they could pitch these to different things? It's kind of like, and that's why I think they're renegotiating, it's kind of putting content on a more expensive arc, right? Because if you can compete, get competitive bids, that's more money that you can ultimately circulate. So yeah, it's interesting for them, but I like for that reason, I don't really love their business. Just because like, yeah, they could have international expansion. They could do like a lot of different things. And I've bought it here or there in the trading portfolio. I don't think I've ever bought it in the investing portfolio. But at the end of the day, like I do want to check out their PE before I make this statement because I have an inclination, but I need to get the facts right. I have an inclination that they're trading at a bad value. But I just want to verify that, make sure that I'm not talking out of my ass on that one. Yeah, they're trading like 2023 actual is 58 on 2024 estimates 36.61. That's pretty high for a consumer, or are they considered communications? Are they consumer cyclical? I mean, if they're communications, that's still high. Either one, they're expensive. They're expensive for their actual earnings. And like, if you look at it, like this is probably an interesting part about it. Their 2024 estimates 36.61, 2025 30.75, right? So where they're forecasting their growth now, they're not really forecasting great growth for themselves. So like the down from 58 to 36, 2024 to 2025, and then only to 30, 2023 to 2024, and then only to 30, 2025. That's not like impressive value that you're getting. Like we always talk about SMCI as a comparison point. Let's check them out. But they did change their margins, so it would be actually interesting to look at them. As a point of comparison, SMCI, and this is tech, but like tech tends to run at high PEs, like 30.41 2024 actual, 21.44 2025, 2026 is 19.31, and 2027.61. Like people say that's the wrong thing. Anyway, like if you compare those values, like, and tech tends to be overvalued and viewed as more risky, it's like, that's kind of why we never had it in the investing portfolio. At the end of the day, would I rather own SMCI at a lower PE than Netflix? Yeah.
So time has flown by today, and I've been having fun. Thank you, everybody, for tuning in. We've had over 1,500 people in here. So thank you all for closing the stock market with us today. We have a comment on Twitter, so maybe we'll hit that quickly and then do the switch over. It's from Corn Cob, he says, I bought a 2004 Thunderbird 24 miles per gallon economy sports car. Then I bought 2013 Ford Transit Connect. Oh, maybe this isn't a question. It's more of just like a story. It's
Yeah,
not really.
I don't think it's a question. All right, I'm going to do the switch.
Okay. All right, I'll see you on the other side. So thanks for everybody. Stick with me as George does the switch over to the Prospero.Ai laboratory. We're going to do the model portfolio update and change these stocks live, so you'll get to see the moves that we are making. I have a couple stories I was going to bring up today that I didn't get to, so maybe we'll cover them on Monday. We were having fun today in the stream, and the topics ran long, but if you're curious about any of them, comment right now because they may or may not make the cut. So if you were interested in one of them and you want to hear it for sure, let me know now, and I'll definitely bring it back up on Monday. But let's take a live look at the QQQ and SPY net option sentiment to see if there's been any changes since we began the stream. QQQ in the 60s is one of the highest levels I've seen in a long time, maybe ever. So that seems to be extremely bullish. And it was at 61 when we started, and it's now at 60. So still up at the high levels for the day. And the SPY is at 49. Now the SPY net option sentiment chart is starting to look a little, I would say, less bullish than it has been. It was in a clear uptrend for so long, coming off those lows, and now we're seeing a dip recently. So definitely something to keep an eye on throughout the rest of this week and next week to see how that chart continues to update.
God, we did not give ourselves much time today. Keep backing ourselves into a corner here. All right, we're going with haste. I don't know. I'm just gonna I'm gonna pull the data first. I don't know enough to know if I'm like doing something bad for security if I show our Mongo database. But who knows? All of you skilled hackers out there, today is not your day. Bloop, getting the data. I really like doing this like net option sentiment movers thing a lot more than the other way we did it.
It's kind of like, I feel like, you know, how people look at the 200-day moving average and all of those type of things. It's similar to that, but for the Prospero signals, right? Like gives you more, yeah.
Yeah, what I'm doing is I'm doing like some raw value stuff.
Mm-hmm.
And then like I'm looking at technical flow and upside above a certain amount.
We have someone asking about HPQ, so maybe we'll check that out during the portfolio update.
I've been burned on that one. I've been burned on that one before. I don't know. I can't.
Sorry.
I was gonna say I don't know if that makes me like a good investor or a bad one. If I'm like I'm not gonna do that, I've been burned. but sometimes the stock just gets me, and I'm like, no.
Well, looking at the signals, I don't think you'd like it because it's got downside higher than upside and only a 59 net option sentiment. So it doesn't seem like it's got great signals right now.
Yeah, Steven saved us all some time there. I'm not interested. No HPQ calls is the verdict. All right, here we go. I need this. I don't know if we've done this live yet.
I don't think so, because I think we were gonna last week, but then we didn't. So I think this is a first.
We ran out of time. Never enough. I don't know. Do I want all those? I don't know. Somehow I grabbed. Oh, well, that's not really my fault. did I do? Oh, I see. God, we don't have time for this, George. Okay, here we go. Some new names on here today. $3.53. Ugh.
Jonathan commenting PayPal's looking good in the signals.
Not in these.
Not in the moving average.
I forgot what I want to do here. What is STLD? Looking like a star. I might have to add that in the investing letter if everything looks good.
Steel Dynamics.
Did they have earnings today? Can you look? Ah, our old friend Xerox. Back in the dumps. We love shorting Xerox.
Yeah, they do have earnings today.
Had or have?
I think they have it.
Oh, well. That is interesting. I don't think we're going to play it. All right, here we go. I think knowing that, you think they have it. You did not give me enough confidence.
I'm not seeing the data for, so I'm pretty sure it's unreleased.
No, we're good. It said next
Okay.
earnings in 56 days. You got your facts wrong, Steven.
Oh yes, yeah. 10/17 actually.
Oh, God. Gotta double check your work. What is this world coming to? Environmental services, RSG. Sure, we'll grab you. Some interesting names today. Ecolab, that also said chemicals. I don't know about you. Sure. We'll do you too. All right, even Barclays is looking good. We added SE before. You're back. Back again. Okay. Sure, why not? See, leaving all these green, we're saving ourselves some time. No. Sorry, Motorola.
You know, a change today is the IWM is leading amongst, QQ SPY Dow.
Health technology? I think we have Stryker already in there. What's going on with Stryker? Is that a win?
Oh, what's the ticker for that? S.
Zillow. Losing momentum. We added new yesterday. Don't need it. How about IBKR? mean, this is kind of a waste. Like, we got technical flow helping us. It's not really a waste. I didn't love what was going on there. Len, what's TH? We'll do Len.
No strikers right now.
When did we close it?
8:14.
All right. What's going on with WM? Everything's going up. And we don't need another WM. Okay. This is fine. We're good. I feel like XBit is one of those very small cap. Yeah, we're not doing that. We're probably doing XRX. Maybe not. And we'll do one. Can you talk to me about the net option sentiment trend? It's looking pretty far down. God, I'm gonna have to like close positions one of these days. Like just keep on doing this and running out of time. It's not great. Not a great way to go. All right, MMS is still there. We've got some DKs. I don't want to do Zella. Well, maybe we'll look at Zella. WD-40 company. Not sure. Yeah. Oh, I missed ROG. Rogers. No Rogers. I'm gonna get this out. All right, and we're gonna look to close some longs. We don't want to get that. Yeah, actually, we can close tomorrow. The markets are feeling pretty bullish right now. I don't. Things are going well for us. Some real hard-hitting analysis here. Take a quick look at long exits, see if we have anything obvious. Come on, don't do this to me. doing? TJX was a good call. Okay, here we go. I think we want to get a Timus. Just balance a little bit. Is AEP a win?
AEP?
Yeah.
Lost right now.
We'll hold it. Okay, I feel good about this. We're a little late. Okay. Any questions? We're done.
No questions. Strong close to the markets today. We'll see how Powell sounds on Jackson Hole on Friday, and we'll be back Monday to share with you guys. But until then, thanks for tuning in. See you guys there.
Bye.